Hi, my name is Rodolfo Hernandez. I'll be explaining why I expect GlaxoSmithKline to underperform against the market. GlaxoSmithKline is a multinational pharmaceutical company with product lines that consist of pharmaceuticals, vaccines, and consumer healthcare products. These lines are further segmented by region, which include the United States, Europe, Japan, and emerging markets. The EMEA region is growing at the fastest rate, with revenue from pharmaceuticals and vaccines increasing by 8% in the first quarter of 2013. Pharmaceutical sales in this quarter grew by -1%, with metabolic, oncology, and respiratory drugs growing by 42, 23, and 6% respectively. One of GSK's marquee drugs, Avandia, had been a leading source of financial growth, but the 2012 patent expiration and associated legal battle damaged the firm. However, a subcommittee of the FDA recently ruled in favor of the Madeline drug, so there may still be an opportunity for growth. Advair, GSK's COPD product, remains a blockbuster drug, with sales consisting of 29.5% of the segment and 8% growth. Though the patent expired in 2010, difficulty in replicating the manufacturing process and pending FDA approval for a bioequivalent standard has allowed Advair to remain a market leader. Both pre- and post-merger CFROI levels have been well above the firm's cost of capital, but the chart clearly shows a downward trend since the early 1990s, which indicates that the GSK is currently in the phase section of the company lifecycle. The firm is looking to combat this by moving into biopharmaceuticals, a strategy they've already begun to implement through their acquisition of Human Genome Sciences and others. This move bodes well for GSK in the future, as biologicals are expected to command a 19.2% plurality amongst pharmaceutical products across the industry in 2013. GSK is also attempting to reverse the fade trend by divesting from declining projects and focusing on new drugs in their pipeline, a move illustrated by its recent sale of its thrombosis brands to Aspen Pharma. The downward trend in CFROI is also reflective of increasingly stringent regulatory overhang, such as the Patient Protection Affordability and Care Act in the U.S. and increased competition from generic. Legal issues have also been particularly impactful, with the firm settling a $3 billion lawsuit related to fraud allegations as recently as last year. U.S. policy is expected to have a positive effect, however, as the number of individuals with health insurance and funding for Medicare and Medicaid will increase by 2014 due to approved legislation. Both the company and the industry are in the mature stage, as evidenced by increased M&A activity, economic stability, and slow growth. Asset growth is fairly typical for this and other firms in the industry, with large spikes representing successful drug introductions as well as major acquisitions. GSK has kept operating margins relatively stable, but asset turns have been on the decline since 2001 as a result of the lead time with R&D development and decreasing sales. It's important to note, however, that this pattern is endemic amongst the company's peers. Using HOLT's multiple driver valuation model, I developed two likely scenarios. The first assumes increasing sales growth to 18.1%, representing increased growth in emerging markets, a boost to R&D expense, as well as rapid market introduction of its pipeline drugs, leading to a warranted price of 18.46 and a 17% upside. The second scenario assumes GDP-like growth, representative of increased generic pressure, a focus on cost-cutting strategies, and less aggressive development of pipeline drugs, leading to a warranted price of 13.41 and a 15% downside. The latter scenario seems more plausible, given that the firm is bolstered by a strong pipeline and is in less danger of the patent cliff than some of the competitors. The recent FDA approval of two melanoma drugs and strong gains by the current stable of products, GSK is unlikely to rush up with special blockbuster drugs like Relevir, the successor to Advair. Based on this, I expect GlaxoSmithKline to underperform, but would issue a hold recommendation given the stability and 4.9% dividend yield of the stock. Thank you.